Hi, everyone. Getting straight to what matters is key, right? So today we're doing just that, digging into the latest CLiK Market Pulse report. This one's dated Sunday, May 4th, 2025.
Yeah, it's packed with the usual stuff, market snapshot, who's moving what, and a trading tip.
And the big headline, really, is that the market's on its longest winning streak since, 2004?
That's right, a pretty significant run.
So the big question for us today is, what's really driving this? And maybe more importantly, what are the finer points you need to grasp? Let's maybe start with the market snapshot figures.
Sure, so overall it's looking positive. The S&P 500 closed up at 566.76. That's a gain of almost 1.5%.
Okay.
And the NASDAQ 100, pretty similar story, 488.83, up just over 1.5%.
And the Dow?
The Dow Jones wasn't far behind. It closed at 413.04, which is up 1.36%.
So really solid gains all around feeding that streak.
Exactly. It paints a picture of broad market strength, at least on the surface.
Okay, let's get into the why then. The report flags three main market movers. First one is about thawing trade tensions.
Yeah, this is quite interesting. There seems to be a bit of a shift in tone. Less confrontational, maybe?
How so?
Well, the report mentions hints from China about possibly easing some restrictions, and maybe a slightly less hawkish stance coming out of the White House on tariffs.
And the market likes that kind of talk? Less drama?
Oh, definitely. Markets generally prefer certainty, or at least less uncertainty. So any sign that trade tensions might ease off rather than ramp up tends to get a positive reaction. Investors feel a bit more confident.
Okay, that makes sense. Less friction, potentially smoother sailing. What's the second driver? Strong jobs data.
That's right. The U.S. added 177,000 jobs in April.
Which is pretty robust, isn't it, considering everything else going on globally?
It is. It points towards, a certain resilience in the U.S. economy. The labor market's holding up, which is a key indicator.
A definite positive sign, then. All right, and the third factor mentioned is corporate earnings. Described as mixed but sunny. What's the nuance there?
So the sunny part is strong revenue. Big names like Apple, Amazon, Meta, they're reporting solid sales figures. People are still buying their stuff.
Okay, good top-line numbers. What's the mixed part?
That comes down to profit margins. The report points out that tariffs are actually starting to bite into profitability. Costs are rising for these companies.
Ah, so they're selling a lot, but it's costing them more to make or sell those things.
Exactly, and that's a crucial detail. Strong revenue is great, but if margins are getting squeezed consistently, it can affect future investment, R&D, that sort of thing.
Got it. That leads perfectly into the CLiK tip of the week, doesn't it? When markets rally on hope, be the trader who reads the footnotes.
Yeah, it ties in directly. The message is basically, look past the cheerful headlines.
Dig deeper.
Precisely. Pay attention to the details in earnings reports, especially any forward-looking guidance companies give. How are they talking about managing costs? That's often where you see the impact of things like tariffs show up first, maybe before it hits the main news.
So it's about understanding the underlying pressures, not just the surface momentum.
You got it. It's about seeing the whole picture, not just the highlight reel.
So pulling this all together, what are the practical implications for you, our listener, trying to make sense of this?
Well, first, keep a close eye on those trade talks. Sentiment can shift really fast based on headlines or even just rumors.
Right. Things can turn on a dime.
Absolutely. Second, think carefully about sectors with complex global supply chains. Tech, manufacturing, they're more exposed to those margin pressures from tariffs we talked about.
So need for extra scrutiny there.
And finally, while this market momentum feels good, it's important not to get carried away. Use the positive trend, sure, but stay grounded in the fundamentals and aware of those underlying risks, like the margin pressure.
Okay, so let's quickly recap this deep dive into the CLiK Market Pulse. We've got a market enjoying a significant winning streak.
Driven largely by hopes of easing trade tensions and solid U.S. jobs numbers.
But, and it's an important but, we need to watch how tariffs are impacting company profits, which underlines that need to look beyond the surface news.
Exactly. Read the footnotes, understand the cost pressures.
So maybe a final thought for you to consider. How might these underlying currents, the trade dynamics, the jobs data, the margin pressures shape things going forward? How do these pieces interact beyond just the day-to-day market moves?
Yeah, thinking about that interplay, that's where the deeper understanding lies. How will geopolitics and basic economics continue to influence the trends we see? Something to definitely keep mulling over.